Mr. Ted George. Good afternoon, Mr. George. Thank you for joining us on the program today. Now, it's not the first time the IMF or even the World Bank will be painting a gloomy picture about the effects of the pandemic on the global economy. But how badly has Africa been affected, and which countries have fared better or worse during the crisis?
Well, I think it really depends where you look in Africa, because the reality is that the IMF is due to bring out its next global outlook next week. But back in June, they were forecasting a 3.2% contraction this year. And that is huge. I mean, that represents, 2 or 3 economies all added together in Africa. The reality is COVID hasn't hit the population as hard as, let's say, Western Europe or South Asia or Latin America. But what we have seen is very limited fiscal space by the African governments to be able to respond to the drop in demand. So the countries that have really been affected, oil-dependent countries, Nigeria, for example, is expected to shrink by 5% this year, Equatorial Guinea by 8.1%, and Angola is expecting a 5th consecutive year of contraction in GDP of around 4%. Also, economies which are dependent on tourism. Mauritius is expected to be down 12%, Seychelles by 14%. No one can travel to these destinations. But what is interesting is the countries that are not dependent on a single commodity, which are a bit more diversified and which are integrated into a regional market, are faring relatively well. If we look at West Africa, for example, Ghana is overall expected to grow by around 1.5% and Cote d'Ivoire by 1.8% this year. So these are initial predictions, of course, but it just shows that if you have a diversified economy, you can withstand the impact of COVID a lot more than if you're dependent on a single commodity export.
Now, heavy spending by governments has pushed up the level of debt, which is forecast to reach 100% of GDP next year. What has been done to ease the debt burden for African countries?
Well, there have been a lot of different initiatives from the very start of the year, because we've actually seen fiscal deficits rising sharply in African governments from around 4% last year of GDP to around 8% this year. The IMF itself has approved over $280 billion in financing, more than a third of that since March. We've also seen the G20 have agreed to freeze debt repayments for the poorest nations beyond the end of this year. And there is the Debt Service Suspension Initiative, the DSSI, which has 28 countries in sub-Saharan Africa getting around $5 billion of relief. And I know the IMF is actually pushing to extend that beyond the end of this year to the end of 2021, which would give another $5 billion of relief. The Paris Club is also, of private creditors, has also agreed to suspend debt repayments. But I think where there's a real concern is about Chinese debt, because there's just not really much certainty about how much it is. It's estimated around $150 billion, and around 3/4 of debt repayments owed by Africa are actually to China. So this is a real question. How big is the debt? But certainly going forward, there needs to be more debt relief offered to African countries to get through this crisis.
Now, with all of this now, are we likely to see an economic recovery in 2021, and what measures are being proposed to achieve this?
Well, the IMF is expecting a rebound of around 3.4% growth next year in 2021 for Africa, which should help fill up some of the drop from this year. But the reality is we've seen a lot of short-term measures which are very costly. Ultimately, the priorities, number one, is to continue measures to protect lives and livelihoods. This means the different health regimes, the curfews, the social distancing, and also credit guarantees, wage subsidies, things to keep businesses on life support so they can get through this drop in demand. The real thing is what is needed in the medium and long term. There needs to be more public investment to boost growth. It can't just be propping up salaries. And this is going to require more lending and more borrowing. And so really the big question here is about debt. There needs to be more debt relief. This is being proposed by the IMF and World Bank, but it really needs to go beyond that. It needs to be private lenders. It needs to be investors as well, who are going to give a bit more slack to these African economies so they can grow. But I think the important thing to bear in mind here is even though the biggest economies have taken the largest hit, South Africa, Nigeria, Kenya, a lot of the smaller economies are actually relatively undeveloped. They're not too heavily dependent on technology. And in fact, they're managing relatively well through the crisis. So there is a good upside in terms of growth if some degree of normality can return by the middle of next year.
All right, we'd like to thank you, Founder and Chief Narrative Officer, Clio's Advisory UK, Mr. Ted George. Thank you for joining us on the program.